Good evening, this is David DT, Trading-to-Win.com. On September 1st, I introduced two state-of-the-art charts with two most likely scenarios which might develop, and I gave my preference to scenario number 2, and I didn't really pay enough attention to scenario number 1 because that's a preferable scenario for the bears and nothing comes easy. Also, I placed the same charts to the page S&P 500 MRT wave, and you can see here both charts, a new corrected chart as well, and a lot of other charts, monthly, weekly, still loading. Anyhow, this is not the point. Let's talk about chart. We're looking at S&P 500 weekly chart. This is October. Oh, it's not drawing. Right, my highlighter doesn't work correctly, but anyhow, this is October 2007 high, wave 1 down, corrective 2 up, impulsive wave 3 down, and this is wave 4. And retracement is about 50% right now, the same as wave 2. Once again, this is all we need from wave on weekly scale. Let's go to the. As you can see on daily chart, we are in wave 3, arguably, but at the same time you see that on a daily chart, corrective sequence ABC has concluded, WC was curved in stone and is here to stay. Everybody is saying that we're going much higher, and this is what projection for wave 3 says as well. It's 1120 target, around 1120. Then we might undergo correction, W4, and then we yet going to go much higher to around 1250. This target cannot be calculated before corrective wave 4 completed, but that's so-called ultimate target calculated based on wave 1. But I'm going to play devil's advocate right now. The problem with fractals. On weekly, we have to have 3 daily waves to feed our weekly wave sequence. And there is no way right here we have it. As you can see, from the very top in 2007, we only have 1 wave. This is the biggest problem I have with this chart. I tried. Sorry, I got interrupted and I forgot where I was before, but anyhow, I'm going to play devil's advocate and I'm going to convince myself that this wave sequence on a daily cannot be used because it does not fit fractal concept of Elliott wave, and Elliott wave is base for the Marx D wave. So what I did, I went down to lower scales, and I was really disappointed because nothing fit really nicely except for 150-minute scales. Unfortunately, I don't have sufficient data for hourly chart. This is 150 minutes S&P 500 cash index. But believe you me, from October 2007 till May, we did have 1 wave. So this is May 2008. Oops. I'm sorry, this is September 2008. So the second wave started, and it went all the way to March lows right here, and then corrective sequence started, W, A, B, C, and it's ended right here. At the same time, up wave sequence started, 1, 2, 3, 4, and I'm going to magnify it a little bit right now. So as you can see, March lows, wave 1, 2, 3, it's undershoot the target, and then corrective wave started. And what I like about this chart is, in spite of the fact that W2 correction being only very shallow, 23.6%, the second correction, W4 actual, was 62%, so altogether it's about 100%, and this is the ideal case scenario. This is the way it's supposed to be. first and second correction has to be somewhere about 100%, well, composite from wave 1 and wave 3. So what's going on right now? I bet a lot of people are going to be caught by surprise because, well, wave 5 was actually extended a few times, because first time it's printed somewhere around here, so it was extended. And right now we might assume that we can possibly in a process of topping out. So what might happen, and that's the first scenario on a page on a website I showed before, where we might go up, and we are going up right now, but we're not going to set new highs. So that's going to be W2 of down sequence or WB of up sequence, and we're going to know the answer tomorrow, Tuesday, whatever September it is. So if that's going to happen, a lot of people are going to be caught by surprise, because CNBC is saying this is a time for correction, September is a month to remember, a bad month for stock, and so on. So people will be continuing buying on the dips. But guess what? If this is ending up wave sequence, and that's going to be WB, and C going to go slightly below WA in order to be printed, they're still going to be saying this is correction, because it's not going to undercut prior lows. But imagine for a second if this in reality is down wave sequence starting, and we're going to be printing W1 is already here, W2 slightly above highs, and then W3 is going to go down. I don't have target for W3 right now, but the moment W2 is going to be printed out, I'm going to have it. I can try to calculate imaginary target right now. For the sake of example, let's presume that WB is going to go somewhere to 1020, and this is basically what I expect based on lower time frames. I posted it on my website tonight. And if it will go to 1020, 1024, then target based on 162 number will be somewhere in the area of 960. That will get a lot of people attention, and that will tell me that we actually already had our highs and we're going to be continuing down. Anyhow, this is just a fantasy. No one knows until something is going to happen, but once again, this time frame 150 minutes fits fractal concept much better, because daily definitely does not fit it. This is David DT, Trading-to-Win.com. That's probably going to be my last video I'm going to be publishing on YouTube. Any other video will be available at my contributors website. You are welcome to join. Good night.